Hey guys, David Robinson here. Welcome to the apartment investing journey. I've got another great episode, another great guest for you today. I'm excited to have Sam Wilson on the show with me today. Sam, welcome, and thank you for spending some time with us.
Hey, David, the pleasure's mine. Thanks for having me on.
So, Sam is an active investor in RV parks and RV and boat storage with experience in multifamily, self storage, parking, and land. He hosts the daily How to Scale Commercial Real Estate podcast and participated in over 30 million in acquisitions just in the year 2021. So, Sam, our podcast is all about the journey. We'd love to sort of hear about your progression in the space. And so, if you don't mind, let's back up and let's talk about how it all started for you. Maybe a little bit about your background and how you got into the space.
Yeah, it's a great question. I grew up in the trades up in Indianapolis. So my family was always in the flooring business. We owned a flooring company. So I kind of was inducted into the flooring business. Gosh, I think I remember first time on the job site about 9 years old, going out and working, working in the trades. And that's all I knew all the way until I was 30. I bought out part of the company because at that point we had grown. My brother and I had started our own company. We'd grown it. I'd bought out part of it, ran it. I mean, we had 30 some odd employees till I was 30 years old. We ended up selling that because I was done with the flooring industry kind of as a whole. And even last week, I got a random email. It was like something about flooring. I'm like, oh, Lord, no, I'm done. It's been a decade and I still can't get away. But yeah, so, we did that till I was 30. And then I had money and time on my hands. I didn't know what to do next. Not college educated. Not that I even think that really matters. But I wasn't college educated and I had no real prospects. I mean, what's going to do with a guy that's all he's known as the trades? Like I'm a tradesman, I'm a business owner. I'm completely unemployable because I would fire myself if I had to work for myself anyway. So completely unemployable and just kind of faltered for about a year, going, oh my gosh, what am I going to do? Like, what am I going to do with my life? And then randomly bought a house one day because I grew up in the trades. I saw an auction coming up, and I went to the auction. There was only one other guy there at the auction bidding on it, so I paid, for a bottom of the barrel prices. I made a fistful of money on it, and I said, well, I'll just keep doing that. And so here we are, 9 years later. Obviously, many iterations later, many asset classes later, as most people do in this business. You kind of start in single family, and I ran the auction circuit for years. Doing only foreclosure auctions. It was a sole source of purchases and that's how I got started. And then in 2018, really transitioned into commercial, into syndications, into being a passive investor in other deals, as well as taking down deals actively. And that also has had its kind of iterative process. But happy to get into that when it makes sense.
Yeah, no, I appreciate that. So, a lot of our listeners come from the small multifamily, and we've got a lot of listeners that are in the single family space right now, fix and flip space, wholesaling space, and are wanting to learn more about how you transition into larger commercial multifamily. So, I'd love to sort of back up and talk about that transition. You bought that house at auction. It sort of got you started, going down this path of investing in real estate, and then you kept doing that for years. And so, what was it that caused you to want to start looking into commercial? Why not stay in that single family fix and flip or whatever you're doing, fix and flip, wholesale, buy and hold, burr, whatever the strategy was? Why not stay in that space rather than push into commercial?
It's the lowest barrier to entry. I think there's a simple way to put it. Anybody can play in the single family space. If you want to get in real estate, it's the lowest barrier to entry. And I think whatever I've done in life, I've always wanted to look left and right of center. Like, okay, if everybody else can do this, that means there's opportunity here. It's like I was going to the airport the other night to pick up actually, we are both coming home, but I went to get the car and come back get my wife. And everybody is lined up on the outside of the curve going to the pickup line. I'm like, guys, there's 2 lanes here. So I just get in the left lane. I mean, there's dashed white lines and everything. They're all just lined up in a line. I'm like, thank you for lining up over there because that shows me I can go this way and I was in and out 10 times fast. People still waiting to get in. They hadn't even made it in the garage yet to pick everybody up. I'm like, this is ridiculous. So I think, employing that kind of same thinking to real estate or anything else, it's like, okay, I want to look left and right of center. So I think the question, if I recall, was how did I get into commercial? Was that right?
Yeah, well, why you even decided to. Obviously, you wanted
Why?
to sort of break free of the where there was maybe a little bit less competition and more opportunity than what you saw in the single family space. But, and then let's talk about the mechanics of making that transition. Cause a lot of people have that same mindset, like, hey, there's a lot of, noise happening in the single family space. Maybe I should push into the commercial space. But from a tactical and strategic perspective, that's a challenge for many people. So what did that look like for you from a very, pragmatic perspective?
The same thing I'm doing right now, because we're kind of making that adjustment yet again right now in commercial real estate, and we can get into that. But the thing I did in 2018 is I found somebody in that left of center space, which in this case was parking. And I said, hey, man, I want to learn the parking industry. It's a real estate play. It's a great real estate play. You can, buying parking garages and buying parking lots, which is, I mean, they're brilliant assets to own. But I didn't know anything about it. And so I had to go to somebody that was very active in the space and find a way to add value. I mean, I flew to where he lived a couple of times, went and toured cities with him. Hey, man, I'll do anything you need. What can I do to learn this business from you? Tell me how I can add value to you. I wore him out. 5 months of, hey, what can I do? How can I help? And eventually he's like, hey, all right, just meet me here and I'll teach you the business. Okay, great. Well, we set up a deal. He said, look, any deal you bring in, we'll split it down the middle and we'll both go make money. So it didn't cost him anything, but a half a day of his time kind of educating me on what the space looked like. And then, I made him a lot of money, which is a great way to start. And I saved myself the pitfalls of going out and trying to figure this business out on my own because I didn't know what I was looking at. I mean, like, oh, hey, here's a random parking lot. What do you think? Okay, we're going to bring in X, Y, Z and look at all this and make sure that this, things I would have never thought about. And that's the same thing really I'm doing right now because we did parking all the way until the pandemic. And then parking really, fortunately for us, we had divested of our assets just before the pandemic, which was great. And then parking got crushed. It's coming back in select cities and markets. It's very, very laser focused though on what makes sense in parking right now. So we just haven't gone back into that asset class. But that's the same thing I'm doing right now inside of the RV park space is going, okay, who is it I can partner with right now where I can bring value to them and we can start taking down some assets together because I see amazing runway in that asset class right now.
Well, and let's go back to, finding that mentor because that's a critical component of your success. So back in 2018, how did you go out and find, there's a lot of education around multifamily. So I think it's easy to go find someone in the multifamily space. There's, mentorship groups, there's, masterminds and all that, but parking a little bit different. And it plays to what you were trying to do, going left of center or right of center, because parking isn't necessarily the play that most people get into when they're first starting in commercial. So talk to us a little bit about that of, finding that mentor in that space. How'd you go about doing that?
The good old fashioned networking. I mean, conferences, that's to this day still a phenomenal way to go and find and meet people that are doing cool stuff. I don't recommend you wear yourself out on it. I'm at the point now where I go to 2 a year and that's it. You could go to a conference every other week if you wanted to in commercial real estate and never get anything done. But that's how I did it. And of course, secondly, I mean, everybody knows this, so I'm not telling your listeners anything they don't already know, but LinkedIn's become an incredible professional networking platform. It's 10 times better than it was even 3 or 4 years ago. So if you're not on there actively connecting with people in the industry you want to be in, I mean, go do that. You're going to make friends and find some amazing contacts there now. Maybe I think that, like I said, a few years ago, you wouldn't have found. So those are two very strategic ways that you can do that.
Yeah. Okay, so let's talk real quick. You mentioned you just sort of glossed over the fact that you divested of all of your parking prior to the pandemic. So that doesn't just happen, happenstance. Maybe it did. Maybe it was just sort of happenstance. But talk to us a little bit about that decision. Why did you get out of that space, and prior to the pandemic?
Yeah, because we got an amazing offer on our properties. And it was like, well, I mean, parking is a long-term, and especially when some of it was stuff that couldn't be redeveloped. So it was only a parking play. So in parking, it's great if you can find a rectangular or a square lot in the central business district and you're like, oh, well, it's 1 acre of land. This can easily be redeveloped into something else. But when it's an oblong corner lot, triangular something, or it's got a dog leg in the middle of it, it's like, okay, in order for anybody to ever assemble all the buildings on this block, tear them down in redevelopment, it's going to be a work of art. Whereas, the assets we had just weren't redevelopable. And it was like, okay, well, it's just a parking play and we're going to double our money and we can all run and go home. Okay. I mean, you do the time value of money calculation. That's exactly what it was. It's like, well, we can hold this for 12 years and make that same amount of income that we could make in selling it today. Let's go ahead and sell it today. That makes sense.
Okay, great. And so, you decided to then transition to RV and RV storage. So, talk to us a little bit about, how are you selecting parking and then RV, right? Talk to us a little bit about how you're making that decision.
Yeah, opportunistic, man. I mean, that's it. The idea that he who chases two rabbits catches none is one that I think your listeners should well be, keep in the back of your mind as I say this, because I've suffered a little bit from not object syndrome, but kind of too many things going on at once. So I'm really dialing in on these two asset classes for a particular reason, but also being opportunistic, and I think that's something you don't want to overlook. So last year, somebody brought a project to me and said, "Hey, I think we need to build a boat and RV storage facility in this particular reservoir. Here's why." I went up, I saw the project. I'm like, "Well, I hadn't really ever thought about boat and RV storage," and I just, took a soft pass at it. Like, well, this is really intriguing. Let's do some market research. Did some market research. I'm like, "Oh, this is an amazing market to be in." And I go, "Oh, wait, what's going on in the RV industry?" So start digging into RV industries. And next thing you know, you're like, there is a lot going on here it's kind of at the front end of where I think this is going. I see RV parks in particular as where mobile home parks were maybe 5 or 6 years ago. They're trading at a much higher cap rate. You're buying a business. It's less of a real estate play and more of a business play, but there's so much that goes into RV parks, and we can get into that. So doing the RV and boat storage and seeing how underbuilt that side of the business was, I also go, wait, there's also RV parks, and that's terribly underbuilt and undersupplied as well. So what does that look like? And that's just how I got into it. So we did this boat and RV storage project, and I go, there's a lot more here, and as opposed to duking it out with everybody else, which we did do 2 multifamily deals last year. And we can talk to how I took those down, because there's some strategic ways that I've taken those down without adding to my administrative burden. So happy to chat about that. But that's when I just started looking at it, and I go, okay, if there's runway here, then we need to double down on playing in a sandbox where everybody else isn't playing. And so that's what brings us to today.
So I have to ask you, because my mind and the way that I function is I got a one track mind, right? I try to stay focused because I don't think I'm smart enough to handle a bunch of different asset types and asset classes.
Right.
Here you are. You mentioned that you've closed 2 multifamily deals. You came from parking, and you're really going heavy into RV parks and boat storage. How are you able to effectively analyze deals and go and handle everything that goes into researching, sourcing, negotiating, writing contracts, writing offers, and being able to find opportunity if you are open to multiple different asset types and asset classes?
Easy partners. I mean, that's the short of it. I tell people this all the time. It is, especially in multifamily. Like, I don't have any friends. If you pick a city, and I got a friend who's fishing in that pond, right? I do, somewhere. It doesn't matter where it is. Greensboro, North. I got a buddy doing that. Like, so if everybody's fishing in each pond, right? Why do I need to go out there and throw another line in the water, bait my hook, and try to reel in the same fish they're getting? Hey, just call me when you got a fish on the line. I'll come help you reel it in. So partners, that has been my approach the entire time. It's like, so somebody brought me, 2 multifamily deals last year and said, "Hey, Sam, I'd love to have you participate with us, help us bring capital, help us manage it, because I'm bringing some industry contacts to the table they don't have, and I'm actively part of the team. But at the same time, I'm not writing the contracts. I'm not sending LOIs. I'm not writing the PSAs. I'm not doing any I do underwriting in the sense that they will send me the finished file, because I'm kind of a nerd and I can get lost in a spreadsheet for a few hours. Probably pry me away from Excel, but it's like, that's the only underwriting I'm doing. Everything's already put in. I just want to kind of verify and get a good hard understanding of where we are from a numbers perspective. But outside of that, I'm not underwriting 100 deals to get one. I'm underwriting one deal that's already under contract to see if I want to participate. That's a much more manageable and scalable way to get into a lot of these opportunities. So, and on that side, that's on the multifamily side. I did that on a fund of funds in a large self-storage syndication last year. And so really the only active deal I had in 2021, what year is it? 2021, was the boat and RV storage facility. Mm-hmm. So that's much more manageable from a one-man shop to do that than it is to go out and take, because it would be physically impossible for me to keep up with all of those moving pieces by myself.
Yeah. And how did you source the RV park and boat storage?
That was brought to me. Again, it was somebody that didn't have the expertise to take it down. They had the opportunity. They said, "Hey, I think I'm sitting on a gold mine. Tell me can you help me with this?" Yeah, well, maybe. Let's go look at it. And suddenly I'm like, oh, wait, you are sitting on a gold mine. And yes, I can help you get funding. And yes, we can put the money together. And yes, I know syndications. And so it was a perfect team. I mean, it worked out great. So that's how I sourced that. And I'm going to do the
And
same thing in RV parks. I mean, that's where we're going this year, is going long into RV parks, which always tend to have a storage component to it, or at least a capacity for storage along with those. So that's the same thing I'm doing right now, but I'm going to take a much more active approach, maybe because we are really niching down and going long into RV parks. I want to be very, very active in that space. So yeah, that's how I'm going to do that. And I don't really intend on taking down more multifamily this year, unless it was just a home run deal, which those are hard to find right now, as you probably know.
yeah,
So
for sure.
question.
Well, then let's talk a little bit about, your game plan in the RV park space. You mentioned that you're really going to hone in on that space. What does that mean to you when you say I'm going to hone in on that? What does that actually mean for our
Yeah.
listeners?
So step one, and this is one of my active goals right now, is finding an operating partner, maybe that's just a step or two ahead of me, somebody that maybe owns a park or two but needs my skill set, somebody that goes, hey, we're ready to grow. We understand the RV park operationally, the RV park space operationally, but we don't have necessarily capital backing or the investor relations team. We don't have the outreach team. That's all stuff I love doing. I can stay on the
Hmm.
phone and talk deals all day long. If you ask me to go out and worry about hiring somebody at the front desk of an RV park, I'm probably going to glass over in the eyes and be like, oh, shoot, I don't know. Like, so I need that partner. I need that operating partner that is ready to grow. And so for me, that's the person I'm honestly on the hunt for right now. It's going, okay, who's out there just getting their feet wet, but already knows more than I do.
Hmm. Yeah, love that. So if you're listening and you're that guy, we'll give you the contact info to reach out to
Please,
Sam here at the end of the show. But yeah. And that's how, honestly, that's how it starts, right? You have an opportunity with your podcast to connect with a lot of different people. I mean, you're doing a daily podcast, so you're doing, 30 interviews a month with quality people all around the country. And, you have little conversations. And so for you that are listening right now, if you want to if you're looking for a partner or you're looking for deals or you're looking for equity, well, get on a podcast tour. There's so many podcasts out there. You can get on that tour, tell a little bit about your story, add value to people, and then let people know what you're looking for. So that's awesome.
yep, absolutely.
So what do you see on the horizon for your business, Sam? I'm curious, sort of big picture, maybe 5 years out, 3 to 5 years out. What are you trying to build? What are you doing?
Man, that's a great question, and that's a common. That's a great question, to be honest with you. In the RV park space, man, I'd love to just go as big as we can. I want to. I mean, because I see humongous runway there in the industry. We had 600,000 new RV deliveries in 2021. We're already on track for that for 2022, which I think 2020 had 350,000, which was a sharp increase over 2019 of like 250 or 275,000. So as you can tell, there's an enormous amount of RVs being delivered to the market right now. I just got a report from, oh gosh, who was it? I'd look it up here, but it was Colliers or somebody like that. That's like, if you're ever going to build, if you can build a mobile home park or a RV park, which are easier to build, a lot easier to get approval for those, now's the time to do it. And they kind of back that up with the
Hmm.
similar stats that I do. So my intention would be is to buy as much as we can and operate as much as we can in that space. One of the problems I've had with syndication models is the sell it in 5 years plan, right? Like everybody wants to 2x their money and then sell it in 5 years. And I'm like, I'm bored with that model, because I feel like we're always selling the milk cow. Like we're getting a big payday, but then we're selling the milk cow. It's like, why? Why are we selling these? And a lot of times it's so that we can meet investor projections or investor returns of 2x equity multiple and 18% of whatever it is, IRR. I'm trying to find a way right now to where it's like, hey, we're going to buy this and our plan is to hold it in perpetuity until it makes sense to sell it. And, we haven't perfected that model yet, but maybe trying to work out a way where we can, make the primary objective return of investors' capital, and then sharing the proceeds, like I said, indefinitely. So that's a couple of the things that we're working on. And again, because I see such runway in the space right now, it's full on acquisition and team building mode.
Love it. Well, look, I want to start winding down here. I want to be respectful of your time. I know you got a busy day ahead of you. Before we do, I got a few final questions for you. The first is, what's the biggest challenge that you're facing right now in your business that we could all learn from?
Yeah, and I mean, I wouldn't call it even necessarily a challenge. It's an opportunity, really, and that is just finding that key person or persons that I need that are just in front of me right now. I mean, that again is the person I'm on the or persons I'm on the hunt for, and so that's something that it takes time. And if you want to learn something from that, I mean, again, there's no ill will towards anybody. So even if the people I'm talking about listening to this, it just there were some opportunities for that person that came up, but it just didn't seem right. That person came along and I started vetting deals with them, started looking at, started having conversations. I'm like, I don't know why this is not the right fit. It's
Mm,
just not the right fit. And so walking away from that is tough, especially when I am not a patient person. I've just admitted that, but I'm not. It's always been a flaw. And it's like, man, I'm ready to go. Like I'm chomping at the bit. Let's start doing some stuff. And it's like, well, you can really get burned if you just start doing stuff. So that's pumping the brakes is not my MO typically, but that's what I had to do. So yeah, that's probably the biggest challenging opportunity we have right now.
And what's something in your business that you're just absolutely crushing right now that you're doing very, very well that we could all learn from?
Content creation. I mean, that's something that people say they struggle with. And I talk to a lot of podcasters like, man, getting 2 or 3 episodes a week, getting those guests, getting everything lined up. I'll be honest, David, like I don't even know who I'm talking to until 5 minutes before the podcast airs. I don't. I got a system in place. I do seven or do, like you said, 30 podcasts a month or 365 a year. I don't even know who I'm talking to. I sit down. I've got a great virtual assistants. I've great, admins on the back end that handle all of my marketing. And it's all hands off for me other than the recording side. And that's how I get 365 episodes in a year. I'm a total introvert. And so a day of recording is like, I mean, I'm dead at the end of the day. I don't have any more bandwidth when that day is over, which is today, to, take on any more tasks or anything more administratively. So finding those key people and putting those key processes in place where I have a full pipeline of great guests and I don't have to worry about it, man, that's a content creation machine and I love it.
Yeah, that's awesome. Well, look, if we had a little bit more time, I'd dive into the systems behind the podcast. But I want to be respectful of your time. Tell everybody what is the best way for people to connect with you, learn more about what you have going on, and potentially, get involved with you on a future opportunity.
Yep. Go to brickeninvestmentgroup.com. That's Bricken, brickeninvestmentgroup.com. Sign up there for our Bricken Investor Club. There's a join now button. It's free, of course. You can also just call me on my cell phone directly if you got questions. 901-500-6191. Again, 901-500-6191.
And don't forget to check out Sam's podcast as well, How to Scale Commercial Real Estate Podcast, on any podcast listener that you like to listen to your podcast on. Sam, again, thank you very much for coming on the show, sharing a little bit about your journey and some of your thoughts around getting involved in starting in the single family space and then transitioning into commercial, and some of the steps that you took to get in the commercial space and how you think about maybe going left or right when people are going down the center. I love that, and I love the analogy about showing up at the airport and staying to the left lanes. That was great. I appreciate you coming on and sharing your journey with us, and I look forward to staying in touch with you down the road.
Thank you, David.